Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 11th of February, 2021. And having looked at gold yesterday, today we're looking at silver and wondering why it has fallen below $27 today when there is such a strong physical shortage. And should we be worried? Let's take a look. Yes, indeed. Yesterday we published a video entitled Gold, Where Next? $1,965 or $1,000, where we highlighted two scenarios. Providing gold can hold above 1850 and then beat 1875 resistance, we could see gold rise pretty much unstoppable to 1960 once it gets over that psychological 1900 barrier. And this was proffered by technical analyst Gary Wagner. On the other side of the coin, though, we have Harry Dent predicting that come April, equity markets will begin to collapse and we shall see gold fall to $1,000, certainly by the end of 2022, at which time it will then start to stage a recovery. Now, at the time, gold stood at $1,843 when we produced that video, and currently, as at 1851 GMT, gold has taken a dip in the last few hours, although it has recovered a little, and stands at $1,826, but has been as high as $1,847 today. It does certainly seem that 1850 level seems, at least so far, to be relatively successful as a resistance point. Now today we're turning our attention to silver because like gold it too has fallen today. At its peak silver stood at $27.30 and it's currently $27.01, having dipped as low as $26.73, and we're asking why, especially when so much is made of the silver shortage, at least at the retail end. Every video we see now is talking about it, ourselves included in the past. Well, firstly, let's take a quick look at the equity markets and the dollar index to see if this gives us a heads up or an answer as to why silver should have fallen. Okay, if we take a quick look at the equity markets, overnight, the Asia Pacific market, as we can see here, we have the Nikkei up 57 points to 29,562. The Topix index up 5. Hang Seng up 134. CSI up 121. The S&P ASX 200 index just down 6. And the MSCI Asia Pacific up 1.74. So relatively positive overnight, and certainly positive on a month and an annual basis, as we can see. Then markets are now closed because it's 1857 GMT in Europe and the UK, and we can see that the Euro Stoxx index was up 23, the FTSE 100 in the UK is up 4, the DAX index in Germany is up 107, the CAC index down just about 1, and the IBEX down 27. So again, not really terrible figures, marginally positive, and again on a month basis, similar situation, although the FTSE is down for the month and the IBEX is down, and all down for the year, unfortunately. Okay, but what's happening in America? Well, we have the Dow Jones Index, which is currently down 113. That's no biggie considering that the market value is 31,324. And so that's down less than just over 1/3%. The S&P 500 is currently down 2 points, but the Nasdaq is up 26. So broadly speaking, as far as stocks are concerned, very little movement really in either direction, with a very slight tilt in America to the negative and in Europe to the positive, but very small indeed. Now, having looked at the equity market, we can take a quick look at the spot dollar index, and as we can see, it's currently 90.43 very marginally up, 0.0680. And we can see that as far as the day is concerned over here on the right-hand side, which I shall enlarge slightly, we can see that we are just, slightly below our highs for the day, having dropped below 90.3635 down to 90.30. If I have a look over here on the left-hand side, I can see the day's range here is 90.26 and as high as 90.47. So we've actually at the upper end of the range for the day. And just to put it into context, if we compare it for the month, we can see immediately here that the market's much lower than as high as it has been. And looking at the 52-week range, just to put everything into perspective, it's been as low as 89.2 not that long ago, and as high as almost 103. So we're at 90.4390 currently, so marginally up, but still doesn't necessarily explain why silver prices have fallen. Okay, so equity markets are broadly unchanged or marginally lower in the United States, and the dollar spot index is marginally positive. Now, less than 45 minutes ago, Bloomberg reported the following, which may suggest an answer. Quote, US stocks headed for a third straight loss. Treasuries slipped as a decline in jobless claims signaled a modest firming of the labour market. Financial shares led the S&P 500 index lower, while energy shares retreated with the price of oil. Gains for tech shares lifted the Nasdaq 100 to a small advance. 10-year Treasury yields rose to about 1.15%. In Europe, the Stoxx 600 index was buoyed by strong results from Royal Mail plc and Crédit Agricole SA. Applications for US state unemployment benefits fell slightly last week in a sign that the labour market is still gradually improving as the vaccine rollout continues and business restrictions ease. After a sharp run-up in equities at the start of February, US stocks have taken a pause as investors weighed the implications of the latest inflation data. In the background, there's still a debate over whether more US stimulus, the vaccine distribution, and the government's determination to kickstart growth will cause the American economy to overheat. While inflation is not showing up in the data right now, inflation is on its way thanks to fiscal and monetary stimulus and pent-up consumer demand that should intensify as the economy reopens. Nancy Davis, founder of Quadratic Capital Management, said in a note. In a speech Wednesday, Federal Reserve Chair Jerome Powell said the US job market remains a long way from a full recovery and called on both lawmakers and the private sector to support workers. He also said it will require more than supportive monetary policy to achieve and sustain maximum employment. Elsewhere in markets, oil slumped after capping the longest run of gains in 2 years. The dollar held steady and Bitcoin climbed above $47,000. In Asia, several markets in the region were closed ahead of the Lunar New Year holiday. Unquote. So, silver's fallen back, obviously partially affected by stronger bond yields, but it does appear at least to show some resilience, having bounced back from this 26.73 level. So, are we concerned about today? Is it a sign of a downtrend? Well, we're not particularly concerned, no. And frankly, some minor correction, which appears to what has happened, was expected. The lesson for today is, in our view at least, that although silver tried to settle below $27, it did receive support at $26.70 and has moved back above 27, though it's meandering at that level as we speak. As a result, silver continues to trade in the range between support at 27 and resistance at $27.50. If silver manages to settle below $27, it will then test another support level at 2670. The one below that is the 20-day EMA at 2660, so silver will likely receive strong support in that 2660 to 2670 area, though quite frankly, in our view, a 10-cent area is a little bit too small for silver. But these are technical wizards quoting these two specific figures. Now, if silver declines below the 20 MA, it will then dip to 2630. On the upside, a move above resistance at 2750 is likely to push silver towards the next resistance level of 2775. If it reaches that, then it could have, getting past the $28 psychological level, have limited resistance then until it reaches 28.30. So business as usual, and perhaps some consolidation really is no bad thing. Now, for those interested in Bitcoin, and even if you're not, it's always worth looking at this. We produced a video 2 days ago. Elon Musk's Tesla investment boosts Bitcoin above $48,000. Is this good for gold and silver? And although Bitcoin has since then fallen back to 45,600, many see this again, like silver, as just a little bit of consolidation. Now, obviously on Saturday we'll be providing our weekly update where we will look at some of the economic data in a little more depth. And we're going to monitor silver to see how it actually performs now towards the end of this week. Interestingly, its current price is not that far off Friday's closing price, just a few cents. And we do suspect, in all truth, that silver might dip down again below $27 because it's going to try and earnestly test that lower level in our view. Again, not worried about that, and it'll be interesting to see then how it ends up tomorrow. We suspect it might even close below 27 today, but then will either continue its slight descent or will gravitate towards that 27.50. Time will tell. It's only a day to wait, and we'll see whether we'll end up at the end of the week with silver prices very close to what they were at the start of the week. That's, of course, not taking into account any other issues that may occur, any announcements by Joe Biden and the stimulus package, or, of course, any proverbial black swans that may be swimming by, though at the moment they seem to be rare. Anyway, what do you think? Do you think silver's going to jump before the end of the week? Do you think it's going to fall back a little? It'll be interesting to compare your views with what actually happens. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to the channel. Not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.